Hi, a warm welcome to everyone to another CROWE Expert Hour brought to you by MICCI. Hello, I am Sean Chia, the Executive Director of the Malaysian International Chamber of Commerce and Industry, longest established chamber in Malaysia, championing businesses for over 180 years. We were founded in 1837. We are not tired, we are not that old. We keep bringing knowledge to our members, and this is one of those that we share with our members. Before we start, some housekeeping rules. Those that are logged in from Facebook, you may leave your comments and questions in the comment section. And those in the Zoom, you can leave your questions in the chat, and we'll try to address as much as we can. And should you not be able to be, should your questions not be answered, do write to us and we'll get it answered for you, right? Now, without further ado, today's topic is tax implications for professional visit pass holders. Now, what are these? Other than a long-term employment pass, these are the professional, the PVPs, which are granted to short-term foreign talents coming to Malaysia, just for a short term, not for a long term of 3 years or more, right? Most companies are not aware that such PVP, professional visit pass holders, are deemed employees, or rather they are deemed as employees for the company hiring them. So today's key highlights for this webinar is to expand on this deemed employers obligations. So the first question would be, do you know your obligation as a deemed employer to these PVP holders? And then what are the tax implications for the PVP holders? And there's also some obligations to the employer too. Are there any exemptions available for such PVP holders? And today, in this Zoom webinar, we have CROWE Global Mobility Executive Director, Shalina Jaffa, to tell us more about this topic. She has 18 years experience specializing in tax filing compliance, application of work permits, payroll services for local and expats, advisory on employment taxes, and individual tax planning. Shalina, are you ready? I'll hand over the floor to you.
Okay, I'm ready, Sean. Okay, all right, I will share the screen now. Okay, can you see my full screen?
Yes.
Okay, thank you. Okay, good afternoon, everyone. Okay, thank you for spending time with me at this point for about for about 1.5 hours, if I'm not mistaken, to listen to a topic on tax implications for the professional visit pass holders. All right, maybe this is a lunchtime for some, and I promise, it won't take long for this sharing session. And also, if there is any problem with the background noise or etc., please just let me know, because I'm still working from home, and it seems to me that someone is renovating his house. All right. Okay, as mentioned by Sean just now, CROWE GMS is actually in collaboration with MICCI, all right? And I am the speaker for today's topic, and straight away we go to the contents, okay? Okay, first one is the introduction to what PVP is all about, yeah? And the second is how the tax impact to the PVP holders' income when they work in Malaysia. Okay, lastly, there will be a Q&A session, okay, where all the participants today, you may address your questions to me, and I will attend, if possible, to all queries. But if let's say that I'm unable to answer all your questions, no worries, you can always write to me. Okay. All right, before we go to the, before we elaborate on the professional visit pass tax implications, let us do a very quick introduction. What is meant by professional visit pass. Okay. I believe that all the participants today who has these foreign workers or professional expatriates employees, they already get used this application for the professional visit pass. Okay, generally, professional visit pass is an immigration pass, yeah, issued to the foreign nationals, yeah, who wish to remain and also provide a specific professional visit for a short period in Malaysia. A professional visit pass usually is granted to foreign talents, yeah, with acceptable professional qualifications or skills. Okay, so they can enter, yeah, the country and provide services, or in fact undergo training with a Malaysian company on behalf of an overseas company, or could be the headquarters, yeah, on a temporary basis, and usually in the range of between 3 to 6 months or 6 months to 12 months. Okay, in the terms of these qualified working rules, yeah, in the terms of the qualified working rules, what are those categories that the employer can apply for the professional visit pass? Before we go to that, I think you have seen this before. This is actually the stamp issued by the Malaysian Immigration Department, MID, on the approval social visit pass, which we call as a sticker. And usually this one will be stick in the foreign or expatriates by original passports. Okay. Okay, before we go to the application for PSBP procedures and condition, as I mentioned just now, what are the qualification working rules? Yeah, basically there are 6 categories in which the applicant will need to fulfill at least one to be eligible for this professional visit pass. What are those categories? Okay, the first one, it could be that the company require an expertise. Probably the local company may not have the local expertise and require from the headquarters office, foreign company, to send them expertise, foreign expertise. So probably not for for a long-term project, just for a short-term project to oversee the project. So this one, the expertise or expertise transfer, the employer can apply for the professional visit pass. Usually, it also involves like an installation or fixing of machines and equipment, yeah, and also example, technical advisor. Second one could be researcher, yeah. This group of employees or an individual need to do some research for the company. Okay, so you may need this researcher to come to your company and do a research for a few months. So you may have to apply for the PVP for this researcher. Training, yeah, it could be you require a professor or lecturer or speaker to come to your university, yeah, to provide what we call this special topics or syllabus. Then this one you may consider to apply for the professional visit pass as well. And what else? Could be volunteers or could be exhibitors, which the governments require them to come, and so on. Actually, all these lists, actually you can look through in the Malaysian Immigration or MID's website, yeah? Okay. So when we go to the application for this professional visit pass procedure and conditions, what are those conditions and procedures? Applications, number 1, should be submitted by a sponsor in Malaysia prior to the entry of the applicant into the country. When we say sponsor, who are they? Okay, usually we refer to the local company, Sendirian Berhad, or whatever company that require expertise from the foreign company. Number 2, the validity of the pass is subjected to the requirement and conditions of the immigration rules, yeah, and policies. And usually we refer to a period not exceeding 1 year or 12 months. Yeah. Number 3, application for a PVP to undergo training at a factory or hotel, however, only applicable for a period not exceeding 6 months. Okay. So very important information here. The PVP, as you are aware that I mentioned just now, is only valid up to 12 months only. So what happened if you require your expertise or you require the services to be extended more than 1 year? Because under the professional visit pass, there is no what we call this concession that this employer can renew the PVP straight away after the PVP expired. Although you may need this, but I think it always go on the case-to-case basis, case-by-case basis, subject to the approval of the Immigration Department. And if the Immigration Department, MID, will approve this, maybe you are only have an opportunity or chance just a 1 year renewal, not like a frequent renewal for this PVP. Yeah. So in the event of the change of in employer, yeah, why the professional visit pass is still valid? What the PVP holder needs to do, they need to cancel the current PVP pass and serve a 3-month cooling off period before they reapply to work with the new employer. Yeah, okay. This is a very like kind of important notes also. And the PVP holders actually are not entitled to apply for dependent pass for his or her immediate for her family members. All right, that is a little bit about this professional visit pass from the immigration point of view. Actually, there are many more information that you can go through from the MRB's website, or even if you have your own work permit agent, you can always seek consultation with them. Now, this is the most important and most interesting. Let us go to the tax implications on the PVP holders. Like what mentioned by Sean just now, who is a deemed employer? Okay, this is what stated in the Act, Malaysian Income Tax Act. Deemed employer is defined as any person who benefits from services performed or rendered by an individual. This is regardless of whether the person employs the individual or is responsible for paying remuneration to that individual. Maybe I give some examples, easy for your understanding. Let's say there is a company XYZ Sendirian Berhad. XYZ Sendirian Berhad is a subsidiary of let's say telecommunications company where the headquarters office is located in London, UK. Okay, now XYZ Sendirian Berhad needs professional expertise to create new software to meet their clients' demand in Malaysia. So because they don't have any local expertise, so XYZ Sendirian Berhad requested headquarters office in London to second one of their employee who are expert to create this new software for the clients to fulfill or meet the client's demand in Malaysia. So the headquarters office in London agreed to send its employee, let's say Mr. Allen, to work for 9 months in XYZ Sendirian Berhad. So XYZ Sendirian Berhad, what the company should do? Because he's a foreigner, so he has to sponsor the work permit for Mr. Allen. However, Mr. Allen's salary or what other remunerations still remain and paid by the HQ office in London, not XYZ Sendirian Berhad. So here, XYZ Sendirian Berhad will be regarded as a deemed employer to Mr. Allen under Section 83(6) of the Malaysian Income Tax Act 1967, although Mr. Allen is not an employee of XYZ Sendirian Berhad. Okay? All right. Now we move on further on the definitions of the deemed employer. Okay? Example, first example, employees of third party. Does it consider that employer is a deemed employer or deemed employees here? Okay, the first one, the third-party employees are working on a project for the company in Malaysia. Secondly, the company sponsors their work permit in Malaysia. And thirdly, company not responsible for their payroll. Okay, what are all these means? Yeah, because there are also a few scenarios whereby the employer will caught under this section 83(6) as a deemed employer. Okay, okay. Let us use as an example company A, company B, company C. Now we go more complicated scenarios. Let's say company A is a foreign company. Company B is a manpower company who supplies the expertise. Company C is the company in Malaysia that requires the expertise to work on the project. All right. Assuming that this employee actually hired by the company A in, let's say, Indonesia. Okay. Because this company A, instead of, enter into agreement directly to the company C, they may need an expert from the manpower supplier to arrange for all these experts to be assigned to this company C in Malaysia. So they enter into a contract with the manpower company, which I mentioned just now, company B. Assuming that this company B is a Malaysian company in Malaysia, Sendian Berhad. So this company B is now actually is the one who would be responsible to arrange for all this expertise to work with on the project belongs to the company C. They will then send all this employee to the company C. And probably the agreement is between the company C and company B, not directly to the company A. Now, question, who is the deemed employer? Company B or company C, which these two companies actually located in Malaysia. Company B is a manpower company. Company C is the company that owns the project, that require all this expertise to work on the project. Whereas the employees is all actually officially engaged by the company A in Indonesia. The answer is company B will be regarded as a deemed employer. Because why? The company B is the one actually who will manage for all these employees. The company B is the one who entered the agreement with the company A. The company B is the one who will sponsor the work permit. Because of this, then the company B will be regarded as a deemed employer to all these employees. All right. When it comes to that, whether this company B or company C actually is the one who received the benefits for all these services of this employee, both of the company actually receive the benefits of the services for all these employees. But now, company B is the one actually who received the benefits by having this manpower agreement with this company A. They manage, they got this manpower fees and all these things. So because they are the one who manage all these employees, so they should be responsible to not comply with the Malaysian income tax rules, which is stipulated by the IRBM. All right. That's why I also stipulated there are the circumstances to consider. Who is the sponsor for the work permit and whether all these employees is on the short-term visitors and whether this is the services of third-party employees. Yeah. Always bear in mind, when it comes to the professional visit pass, we always refer to the length of employment, which is 1 year. The maximum is 1 year, not more than 1 year. Okay. After we understand on the concept of the deemed employer, let us move on to the more technical part, taxability of employment income. All right. Employment income generally is taxed in the country where the services are performed. Yeah, this is regardless of where the contract is entered to or where the remuneration is paid. Okay. For example, maybe I give example for easy understanding, let's say this Encik Ahmad, he is a Brunei citizen. And okay, maybe no, I don't want to give this example yet. This one will comes to the point number 2. The point number 1, employment income is taxed in the country where the services are performed. I give an example. Let's say that this Mr. Henry, he's a UK nationality. He worked with the company ABC Sdn Bhd as a project director. All right. Okay. He signed a contract with the headquarters office in UK, not with the company in Malaysia. He just, come to Malaysia to perform the work for 7 months as a project director to oversee the project with the company ABC Sdn Bhd in Malaysia. All the salary still remain with the UK company. Now, this salary that received by Mr. Henry from the UK company will be subject to tax in Malaysia. He just come here to perform the work. He just come here to oversee the project. But all my salary, in fact, the employment contract still remain with my UK company. Yes, the answer is yes. Because why? Regardless of where Mr. Henry signed the employment contract, regardless of where Mr. Henry received the salary, because Mr. Henry perform or exercise his employment here, performing the work here in Malaysia, that is where the taxability, that is where will trigger the taxability of income in Malaysia. So IRBM has a right to tax Mr. Henry's income or salary received from the UK company. So now we move on to the next one. Employment income deemed derived from Malaysia under the following circumstance. Number 1, where the employment is exercised in Malaysia, where the leave period is attributable to the exercise employment in Malaysia, where the duties performed outside Malaysia are incidental to the exercise of employment in Malaysia. I go one by one. Where the employment is exercised in Malaysia, straightforward. Where the employee perform work in Malaysia, so definitely the salary or whatever remuneration should be subject to tax in Malaysia. Number 2, where the leave period is attributable to the exercise of employment in Malaysia, where this employee probably go back to their hometown for a leave, for a vacation. And whatever period of absence in Malaysia related to the vacation actually attributable to the exercise of employment in Malaysia. Maybe he spent 1 month holiday, what we call travel back to Australia for a vacation or for just to finish off his holiday. So because he's still actually under this employment with the company in Malaysia, 1 month he stay in Australia for a vacation or for holiday, this will still, whatever salary that the company pay during this period of vacation still will be regarded as attributable to the exercise of employment in Malaysia and therefore subject to tax. The next one, where the duties performed outside Malaysia are incidental to the exercise of employment in Malaysia. Now, this is a bit technical. Okay, let's say assuming this Encik Ahmad. Encik Ahmad is again, I just use this a project director. Encik Ahmad working with the company ABC Sdn Bhd, and this ABC Sdn Bhd what we call this has a project in Malaysia. And at the same time, ABC Sdn Bhd requires that Encik Ahmad to market or whatever, to market the product, to the clients in Singapore. So Encik Ahmad then will be seconded or will be sent to the Singapore company for, let's say, 1 year, to find the clients. To find the clients to sell the products belongs to the company in Malaysia, ABC Sdn Bhd just now. So, question, will Encik Ahmad, who is exercising employment in Singapore, to market the product belongs to the company in Malaysia, and the salary received from the Malaysian ABC Sdn company subject to tax in Malaysia because he worked in Singapore. He find the client in Singapore. He sell the product in Singapore. The answer is yes. This is stated under Section 13(2) of the Malaysian Income Tax Act. Whether duties performed outside Malaysia but connected but related to the exercise of employment in Malaysia. That's why Encik Ahmad's salary paid by the ABC Sdn Bhd for the services he performed in Singapore, marketing the products, still will be subject in Malaysia. Yeah, so it's a bit complicated. Pity Encik Ahmad, he may then caught with the double taxation, double to pay tax twice, either in Singapore, in Malaysia. So this is more advanced topic, yeah. So I will not actually further discuss on this, on the double taxation issues. All right, now we move on to the next one, income tax exemptions. Okay, having listened about the taxability of income for the professional visit pass, maybe these professional visit pass holders may not happy. They may say that I just come to Malaysia for 6 months. I just come to Malaysia for 7 months. I don't even a resident in Malaysia. As I know, resident in Malaysia, you must have at least 182 days in Malaysia to become a tax resident. I only stay in Malaysia for 150 days. And the worst scenario, I still need to pay my tax in my home country. Why I still have to pay tax in the host country, Malaysia, and all these PVP holders may not happy. Okay. Of course, whenever this as an individual, where they caught in the situation, they have to pay tax twice on the same income. Based on the OECD, all right, they always have a possibility for either country home or host country give them an exemption on the tax that they paid twice on the same income. Because all these PVP holders exercise employment in Malaysia, so now we look at the Malaysian Income Tax Act. What are those tax exemption applicable for all these PVP holders? The first one, 60 days tax exemptions. This is the key number, 60 days. Yeah, okay. There is one schedule in the Income Tax Act that we call a Schedule 6. Yeah, Schedule 6 of the Income Tax Act, actually they were summary, or they were stated what are all the conditions that an individual will be exempted from tax in the certain extent. Number 1, under paragraph 21, Schedule 6 of the Malaysian Income Tax Act 1967, there is one paragraph to say that this employee or individual, if he, let's say, perform work in Malaysia for a period or periods not exceeding 60 days, not exceeding 60 days in a calendar year. So the income that he received or salary that he received, usually from the home country because he's just come here for a very short term period, will not be subject to tax in Malaysia. All right, okay. This actually, a lot of scenarios has been given in the public ruling number 8/2011 under the title of Taxation of Foreign National Working in Malaysia. Yeah, I give an example. Let's say this Mr. Andrew was in Malaysia in 2021 for 31 days. All right, okay. He came to Malaysia for the purpose of employment. And for 31 days, let's say he came in Malaysia on 1st March until 31st March for 31 days. Then he go back to, let's say, Australia. However, the company say, oh, Mr. Andrew, I think you need to come back because we still need your expert to sort out these issues. So then Mr. Andrew came back. Remember, he already spent 31 days just now from 1st March until 31st March 2021. So let's say, assuming this Mr. Andrew came back on 1st September 2021. and sort out the issues with the company, yeah, helping the company, consult the company on the whatever project for about another 15 days, 2 weeks lah, or 15 days. Then after that, Mr. Andrew said, okay, I have to go off already. I want to go back to the home country company already, employers. Now, just now, 31 days, plus the second trip, 15 days, altogether how many? 46 days. So, whether this Mr. Andrew subject to tax or not, maybe the company in Malaysia say, hey, we use Mr. Andrew services in March, January to March, and also from September for 15 days. Do I need to report IRB or not? Do I need to inform LHDN or not? Because he came this for the 60 days tax exemption. Technically, yes. This is the challenge part. Technically, Mr. Andrew is not subject to tax, but in practical, the IRBM still require the employer to inform IRB about this Mr. Andrew's presence in Malaysia. Okay, I know not many of these employer may want to inform IRBM about the presence of their employees who came here under social visit pass. Remember, under social visit pass, they are not allowed to work. If let's say that you want to get your expertise to come here to actually genuinely perform living the work, so please, apply for the appropriate pass, like a professional visit pass. But if let's say they are not coming here for an employment, just come here to sit for a meeting or just come here to review some work, that one is okay. That one is just like a very like kind of once-off requirements from the company to get them come. Maybe they come from the social visit pass. So don't bother to inform income tax on that, LHDN on that. But the one that the LHDN may wanted to know is, let's say, they are actually performing work. Like this case, Mr. Andrew, he actually performing work. Although for 46 days, he performed the work. He just not come there for a social visit. So that's why IRBM still wanted to know. So of course, there is not always a scenario the company wanted to inform IHDN or RBM about this one. But in practice, IRBM may wanted to know why they are coming to Malaysia and so on. But technically, they are not subject to tax. Just of the matters of the operationals, just to notify IRBM. Okay, that is the first, the 60 days tax exemption. Now, under the 60 days tax exemption, there are 3 categories. The first one, we are talking about in a calendar year, not exceeding 60 days. There is another second category under the 60 days tax exemption. They said in the Act where a continuous period which overlaps the basis year for 2 calendar years, not exceeding 60 days. Where is this? Yeah, this is all the Income Tax Act statement. Okay. The number 2 category, when they say a continuous period which overlaps the basis year for 2 successive calendar years, not exceeding 60 days, still not subject to tax. I use back Mr. Andrew case, right? Assuming that Mr. Andrew, he came to Malaysia, ignore on the 1st March until 1st January until March. Assuming that this Mr. Andrew came to Malaysia on 1st September 2021, all right, and until 15 September 2021, 15 days just now. Please ignore the 31 days because I want to use the second scenario. So Mr. Andrew came to Malaysia on 1st September 2021 to 15 September 2021 for 15 days. Then Mr. Andrew came back on 16 December 2021 until 15 January 2022. Okay, 15 January. There is a 15 days in January 2022. So here, there are 2 calendar years, 2021, 2022. Question. After 15 January, Mr. Andrew decided to go home, to go back to his home country. Question. Will Mr. Andrew subject to tax or not for the calendar year 2021 and 2022? Yeah, the answer here, the answer in the 2021, he only spent 15 days, right? But in not 15 days, sorry, from 1st September to 15th September, 15 days. Then after that, he came back on the 16th December 2021, continue until 15th January, where altogether about 31 days. So when you count 31 days with 15 days, he only in total have 56 days, although we are talking about 2 calendar years just now. So when they say continuous period, which overlaps the 2 calendar years not exceeding 60 days, under this example, Mr. Henry still eligible for this tax exemption under 60-day rules in calendar year 2021 and also in calendar year 2022. Okay, all right, as long as you count all together not exceeding 60 days. All right. And there is also the last one category under the 60 days tax exemption. I will just very quickly brief on this one because there is more topics that I would have to present after this. A continuous period not exceeding 60 days which overlap the basis year for 2 successive years of assessment. This one we're talking about 3 calendar years. Again, 3 calendar years which altogether continuous not exceeding 60 days. As long as it's not exceeding 60 days, even we are talking about 1 calendar year, 2 calendar years continuously, or 3 calendars continuously. So all these period shall not be these employees will not be subject on the salary that he received from the overseas during this period of employment. Okay, quickly due to the double taxation agreement. Okay, double taxation agreement is a bit complicated. But double taxation agreement is the most important for the employers to understand whether their PVP holders can qualify or not for the tax exemption under double taxation agreement. The 60 days tax exemption is rather a bit difficult to fulfill the condition because sometimes you may require your expertise to come back and more than 60 days, right? Okay, because you apply for the PVP for, let's say, for 10 months. Of course, 10 months already more than 60 days. So let's say this PVP holder said that I just wanted to know, and he asked the HR whether my tax is subject to tax or not, my income subject to tax or not in Malaysia. I was paid from UK. I only here for 10 months. Yes, UK and Malaysia, for example, the country, they signed the double taxation agreement. So when it comes to the double taxation agreement, this employee who worked for 10 months in Malaysia, when all the salary paid from the UK company, not even not even 1 cent salary charged back to the company in Malaysia, all actually responsible bears by the employers in overseas. And this employee, the very important, not stay in Malaysia more than 183 days. Yeah, this is one of the condition. And also, there is no any permanent establishment issue with the overseas company in Malaysia. By having this employee work in Malaysia, he can qualify for the double taxation agreement. I know this is a bit technical because when it comes to the double taxation agreement, number one, the very important, we wanted to know where are they from, their nationality, and we have to check with the IRBM whether there is a double taxation agreement signed or not between Malaysia and that country of origin of that PVP holders. Secondly, to identify how many days these PVP holders in Malaysia. The key number is 183 days, yeah. If let's say these PVP holders stay in Malaysia more than 183 days, regardless of where their country origin from, they are no longer qualified for this double taxation agreement. And the last one is the permanent establishment issue. This is more on the corporate tax side. All right. Okay. So this is where the employer has to understand and maybe require an expert to advise them how their PVP holders can claim the double taxation agreement. And again, remember, from the LHDN or IRBM perspective, there is no automatic granted for the tax exemption. You need to submit the document first to the RBM. If the RBM said submit income tax return, please do so. Then only claim back. Then only claim the tax exemption. Okay, now we quickly go for the, okay, I already explained this on the 60 days tax exemption. Okay, this is all the wording. The number one period, do not exceed 60 days. Okay, I already explained this now, so we skip this. Okay, this is a very important also. This is a note. 60 days refer to period of employment in Malaysia, not to the physical presence of the employee in Malaysia. Wow, this is a bit confused. It will confuse you, right, as an employer? I thought 60 days we are refer to the number of days. Why now 60 days you say refer to the period of employment? Yeah, this is what IRBM says so. This is what the Act says so. When we refer to the 60 days, we refer to the period of employment. Assuming that this Mr. Henry will need to oversee the project in Malaysia for a few days, maybe for 1.5 months. It is very important. The minute that you want to send Mr. Henry to Malaysia for 1.5 months to oversee the project, prepare employment contract or contract of services stated clearly that Mr. Henry will come to Malaysia for, let's say, 1.5 months or 56 days, for example, or 30 days, for example. Yeah. And if, let's say, Mr. Henry came to Malaysia, spent for the 56 days, and he received the salary, of course, from the overseas from the overseas company. When the RIBM assess the information, they were the first one they will ask, please submit the employment contract. I want to see the employment contract. Although the passport that shown by Mr. Henry, says that he was only in Malaysia for about 40 days, for example. But this one is not sufficient for the IRBM to grant him a tax exemption under 60 days tax exemption. They still wanted to see the contract. And the most important, they still wanted to see the passport, whether the number days and days out, days in is not exceeding 60 days, and whether the contract clearly mentioned not more than 60 days of period of employment. Yeah. Assuming that this Mr. Henry stay in Malaysia, all right, stay in Malaysia, let's say for 65 days, 5 days extra, 65 days, yeah. The contract clearly mentioned Mr. Henry supposed to work in Malaysia for 1.5 months, let's say 56 days. The contract say 56 days, but Mr. Henry, he likes so much Malaysia, he continues stay in Malaysia for another 1 week, which altogether, if we compute the number of days and in based on his passport, 65 days. But at that time when he already, worked in Malaysia, he's already completed his assignment as 56 days, but just, continue to work in Malaysia until 65 days. From the IRB points of view, as long as the period, let's say 1 week after he completed his assignment, is actually only for a vacation, just wanted to spend a few 1 week in Malaysia, which is more than which together with the 56 and 7, 8, 9 we count is together 65 days. IRB may consider this, you are still eligible for the tax exemption because your period of employment not more than 60 days, but you just actually stay in Malaysia for a few days. Although it's more than 60 days, I still can, consider this, that you are actually exercising employment or exercise employment not more than 60 days. It's a bit confusing, I know. It's a bit confusing, but that's why I don't encourage many of the employers, when they wanted to get their expertise to come in Malaysia and they are play around with the 60 days exemption, sometimes they are not fulfill the condition as well. So it's not easy to get this 60 days exemption. Otherwise, if let's say this employee is not qualified for the tax exemption, so then he will be a non-tax resident, right? All right. This is one is the double taxation agreement that I mentioned just now. Okay. When you look at the double taxation agreement, please look at the three conditions here. The first one, you must ascertain whether the country of origin of your PVP holders, let's say UK, US, let's say what else, Indonesia, Australia, has an agreement with the Malaysia. Do remember, USA may not have an agreement, double taxation agreement in Malaysia for those related with the employment income. USA, they do not have this double taxation agreement with Malaysia related to the employment income. Only certain income or activities or business that are eligible between for exemption between Malaysia and the USA. Yeah, please remember that. Yeah. Okay. And the one that I mentioned just now, that is also important to understand whether your PVP holders stay in Malaysia not exceeding 183 days, whether the salary is paid, remain paid, a payroll still administered by the home country. Yeah. If let's say your PVP holders come to Malaysia and the salary paid by the local company is already contradict with the conditions that stated under this, set out by the DTA. So cannot, the PVP holders may not be able to claim the DTA already. And then the third one, if the remuneration is not borne by the permanent establishment. Okay, permanent establishment is a bit confusing when it comes to the corporate. This one is more on the corporate tax issues, yeah. Permanent tax establishment, or we call always as a PE, will be created when, let's say that this employee hired by the foreign company, and this employee come to Malaysia performing work, let's say 7 months. Yeah. From the double taxation agreement perspective, if your employees come to Malaysia, perform work with the company in Malaysia for 7 months, more than 6 months, usually more than 6 months, there is a potential of the foreign company to create a permanent establishment in Malaysia. So when this foreign company created permanent establishment in Malaysia, they will trigger the tax reporting already for that foreign company and also for that employee. If you want to know more about the PE, I think this is where you can consult for those who are doing corporate tax. Okay. This is where also the conditions say, if this happen, so the employee, and if let's say this permanent establishment company that created in Malaysia is the one that bear the individual salary, so they are already not fulfill these conditions. Okay. And also the last one, when the income or remuneration not charged back to the P&L of the any of the local company in Malaysia. Yeah, right. If you want to know more about the DTA, you have to seek advice from the expert. Yeah. Okay. Okay. Now we move on to the quickly to the deemed employer sponsor company to consider. Yeah. Okay. When you are a deemed employer, all right. Assuming that you are a deemed employer, and you have this PVP, a group of PVP holders, and then as you know, when you are treated as a deemed employer, the first one that the IRBM wanted you is what? To comply with the employers tax obligations under Section 83. Okay, so this one I already summary. What are those points that you must come to your mind? Make it this as a checklist. Number one, whether if your PVP holders qualify for the 60 days exemption, all right, or qualify for the double taxation agreement. If yes, are you ready with all the documents to submit to the IRBM? Are you ready to make sure that all these documents all this evidence satisfy the IRBM? Yeah, that's why you must make sure that you know what are those documents required for the purpose of claiming the double taxation agreement and also 60 days tax exemption. Cost consideration, as a deemed employer, you also have to pay the taxes. If let's say that the PVP holders, not qualify for this tax exemption, so the tax that will be imposed is a flat rate of 30%. It's a lot. Yeah, it's a lot. Without entitlement with any personal relief. The next one, as a deemed employer, you must also take into consideration what are your tax responsibility as a deemed employer. You must notify RBM. You must, the tricky part is to comply with the PCB, monthly tax deduction, to notify IRBM on the cessation of the employment and so on under Section 83. And then the next one on the corporate tax exposure, the one that I mentioned just now under the permanent establishment risk, if any. And then also you have to consider on the departure from Malaysia. Yeah, employer might not be informed. Yeah, how can a deemed employer to comply with the notification of cessation of requirement? Yeah, sometimes the PVP holders accidentally has to go back to their home country urgently. Let's say that they're supposed to complete their work 1 month, another 1 month. But unfortunately, they have to go back. And you as an employer, you may not know. So you know, but you are like kind of, what should I do? How should I inform IRBM? Because IRBM usually say that you must actually inform me within 30 days. Yeah. Before the date of departure, before the date of cessation. This one not even like 30 days sometimes. Yeah. Sometimes they need to go off very quickly. So this is also uncertain scenarios or uncertain issues that the deemed employer may need to take into consideration. Yeah. And the last one, the MTD, PCB, monthly tax deduction. How do you want to comply? The salary paid from the overseas country. Do I need to comply on behalf of the overseas company? Cannot be, because the salary I don't even pay to the employee. So all these issues that may cause the employer may cause the employer not fulfill or not able to comply with the IRBM requirements or law under Section 83. All right. Okay, I have done with a very what we call this brief on the professional visit pass and how the tax impact on the PVP holders. So how we can help you? All right, as a CROWE, we are more than happy to help you with the tax compliance for the deemed employer. As you know, this is not easy for the deemed employer to help your PVP holders in order to mitigate the tax exposure. So we are more than happy to help you. And then also you may wanted us to understand how to comply with the tax filing with your individual or expatriate. Yeah, if you have a foreign workers who is subject to tax from manufacturing companies, for example, do you know how to help them with the foreign workers tax filing? Do you think that the foreign worker will be subject to tax or not? They only pay not much, they only pay little. Why they still need to subject to tax? This is something that you may need to seek advice from the expert. If you ask LHDN, they may say that these foreign workers, if let's say he receive income more than 34,000 or 35,000 and some more, they are not resident in Malaysia, I want to tax him on the 30% flat rate. Please careful with that. Application for 60 days tax exemption, this is not easy. If I tell you that you can just simply tell IRBM, I want to claim 60 days tax exemption, sometimes IRBM will take more than 1 year to assess the eligibility of this employee claim the tax exemption. It's not easy, right? Work permit, yeah, we can help you with a work permit. We are not doing tax, but we are also can help the client with the work permit. Because as a tax agent, I think it's a good if let's say we also can help our clients with the work permit. So at least we know how to advise the company what are the tax exposure. Application for special pass, yeah, this is one of the special pass required under the IRBM, MID if required, yeah. If let's say they are overstay in Malaysia, for example, and if let's say you are talking about special appeal, maybe you are not appointing, you are not wish to appoint CROWE, but you think that maybe CROWE can help with any tax appeal or any issues with the tax audit, please feel free to contact us. All right. Okay, this is one of our what we call this is our mailing list. Actually, if you scan to our mailing list, you can see all of our tax event, or in fact article or tax chat or tax knowledge. You can just go and scan the things, and if you need any questions, so we can help you. All right, now we come to the end of the Q&A session. I completely end my session on time, so we have half an hour Q&A session. Before I pass this to Sean, maybe I will answer this question, 3 questions first that posted in my slides, on my slides. Number 1, if the employee's professional assignment is more than 12 months, can employer apply PVP for more than 12 months? The answer is no. As you know that PVP is only for 1 year, not exceeding 1 year, not exceeding 12 months. If let's say that you foresee that your employee would need to perform the work more than 1 month, so then change your PVP to the employment pass. Although the MID may consider to renew, to approve the renewal of the PVP, but it cannot be like kind of frequent renewal. It maybe it's only like if you are lucky, if that they okay with they satisfied with your reasons, so they may grant another 1 year renewal of the PVP. Okay. Question 2. If the employee entitled for the tax exemption under Para 21 Schedule 6 of the MITA or under the double taxation agreement, does the employee needs to submit his tax return Form M? Remember what I told you just now? Practically, yes. In fact, technically, this employee not subject to tax because he fulfilled the conditions under the 60 days tax exemption and or the double taxation agreement. Practically, IRBM still want the employee to submit their income tax return. In the income tax return, what the employee can do? Employee report all the income. But when it comes to the tax payable, you can put nil, 0. Meaning that you are not supposed to be imposed, you are not supposed, to be taxed in Malaysia for the income that the employee received from the home country, because you has met the condition under the 60 days exemption and also under the double taxation agreement. It is recommendable when the employee submitted their income tax return or Form M, enclose or attach all the supporting documents. This is also very important. Without the supporting documents, then the IRBM may audit the employee and also may audit the employer. That is one scenario. Both get audited. So how you want to make sure that all these documents will satisfy the IRBM? IRBM has published all this information in their public rulings. You can go to the public rulings under the foreign nationals exercising work in Malaysia. In the IRB's website. There are many more information. What are those requirements that they wanted? So you can go through the IRBM public ruling. But if you don't want to have an headache, if you think that this is something that you need an expert, either you go to the IRBM office, ask the officer, or you go to the expert. Okay? Question 3. Deemed employer or sponsor company need to pay SOCSO for the employees holding PVP? Yeah. Actually, yes. The answer is yes. Yeah. You remember? There is an announcement made by the Malaysian government under the CROWE, effective 1st January 2019. All the employer who has this hiring these foreign workers or foreigners, yeah, they must actually contribute. They must actually contribute to the EIS or Employment Injury Scheme. Because if you know, under SOCSO there is two definition of EIS. One is Employment Insurance Scheme, which is applied to the local. Yeah. The other one is Employment Injury Scheme. This is the one applies to the foreigners. So as a DIM employer who sponsor the work permit, actually they need to pay as well the SOCSO for these employees holding the PVP, because they need to fulfill their because they need to comply with the RBM. So of course they need also to comply with the other requirement by the other state bodies. Yeah. And as you know that for the Employment Injury Scheme, only the employer's contribution is required, which is 1.25% of the monthly wages. Right? Okay. All right. I have answered all the question on my slides. Maybe I have because I understand I have a few questions from the participant here. Let me stop share first. Sean?
All right, thank you, Shalin.
Yeah.
Shalina.
Yeah.
Wow, I tell you, just bring back a host of memories with me when I used to do telecom business,
Oh, okay.
where two companies,
Yep.
two UK companies contract each other
Mm-hmm.
to deliver telecom projects in Thailand,
Oh, okay.
and it's funded from the Malaysian head office, which is I'm involved in. So then you have foreigners coming in and out. I come in, and then
Yeah.
this guy. So it was just you just bring back some very
Yeah,
complicated
yeah.
memories,
That
right?
is
In terms of
always an
taxation,
good.
then even the Malaysia side, even though okay, the job is delivered in Bangkok, but the funding and the expenses and stuff like that were all funded from Malaysia. Whether
Yeah. A lot of issues, Sean. Not
correct,
easy also to tackle. Yeah,
correct,
I know.
correct.
Yeah,
Imagine that,
especially when it comes to the compliance with the state bodies. Yeah,
correct, correct.
especially with the LHDN. Yeah.
Okay.
I understand there are three questions. Is it, Sean,
Yeah,
from the
exactly.
participant?
I just wonder, quite a lot of them.
Oh.
Sometimes, let's say, this relates to the third question, which is this like a director's fees paid for directors or non-executive directors,
Okay. All
that
right.
comes in, gives advice. Let's say every quarter he comes in for a meeting, during board meetings, and he gets
Yeah.
paid, and then it is more than 60 days,
Yep.
etc. It gets complicated, right?
Yeah, it's get complicated, especially when they are looking at the non-service director, non-independent directors, receive director's fee, and the worst scenario, these directors not even stay in Malaysia, they stay in Japan, for example, and just receive this director's fee. I guess that these questions whether this director's fee still subject to tax on the recipient, the non-service directors, and also non-independent director and so on. Okay, when a non-resident receives non-resident receive directors, non-resident directors receive director's fee from a resident company in Malaysia, local company, Sendirian Berhad, in Malaysia. The director's fee is subject to tax under the employment incomes pursuant to section 13(1) D of the Malaysian Income Tax Act. So IRBM has made it very clear. Wherever you are non-resident director, if you stay not even 1 day in Malaysia, 365 in Japan, but you still receive director's fee from the Malaysian company, still I want to tax you on that director's fee. All
So
right.
it is something like a withholding tax, right? You withhold, right?
Not really, because this is more on the, when we call as the director's fee, this is captured under employment income.
Okay.
When comes to the employment income, so as usual, the employer in Malaysia must report in the Form EA. And the employee who is staying in the overseas, too bad lah, he still need to file the Form EM. This is different from those independent consultant, whereby this independent consultant performing work, let's say in Malaysia, they actually overseas, they actually has a company in overseas. Then this independent consultant coming to work in Malaysia, perform the services, and the company in Malaysia by right supposed to pay the consultant fee, you know, to this employee or to this company. And this one may trigger withholding tax. That one different, because that one is more on the consultants contract for services, not the contract of services. So when it comes to director's fee, quickly come to the mind, oh, this is employment income, therefore I need to report in the Form EA. Employee need to report in the Form EM. And also, in fact, the non-executive director who received this also must report the same thing in the Form EA and also in the Form EM or Form EDE. Regardless of what are the status, they receive director's fees, that is already trigger under Section 13(1)(a).
Okay. Right. So the point is, if the director were to employ services of a tax agent to do all these things, maybe it doesn't even make sense anymore.
Yeah, it doesn't make sense anymore, because sometimes they are confused, because what is the meaning of the non-service director and what is the meaning of the service director? Of course, when we are talking about non-service director, are they as the owner of the business? You know, are they is the one who run the business? Are they is the one who actually, you know, not the director who actually in a position, not receive the salary and so on, but they receive some whatever shareholders income and all these things. But I think generally more of the companies who has been this director's fee is one of the element that they would receive as part of their remunerations.
Okay.
That's why sometimes you can also see some directors may receive a lot of director's fee from the various companies. And this company, let's say 10 companies director's fee. So you must show IRBM, LHDN, 10 ES form. 10 ES form of the director's fee. Right. I hope I answered that question, Sean. Is there another two questions? I think
two more.
Yep.
There's one here saying deem employer applicable to all classes for professional visa.
Yeah. Okay. All right. Just now I did mention about the definitions of a deemed employer. I hope that I clearly defined that. To answer this question, deemed employer shall apply in all cases, where an employer, as long as that employer receive benefits from the services that this employee perform or the PVP employees perform in Malaysia. This is regardless of whether the employer employs the employees or not. As we know, the PVP holders are usually employed by foreign employers, right? Okay. So to answer this question, yes, the answer is yes. The deemed employer applies to all employers who receive benefits from these employees who perform work in Malaysia, whether they are expertise transfer, whether they are technical advisor, whether they are professor, or whether whatever categories. As long as you an employer, you receive or person, I will call. Sometimes they don't want to call themselves an employer because they are not the one who signed the contract with the employee. They call as a yeah. So this deemed employers still apply to all these classes of professional visit pass.
Okay, right. And then one more last one here is I think you answered it. Maybe for clarity, you might repeat it again. It's written here as PVP. 6 months or less in Malaysia need to register and pay income tax?
Yeah, yes. Of course, we advise that the employer or deemed employer to register and pay income tax. You know why? Because the immigration department, they may send the information to the LHDN, IRBM. So there is a case where the IRBM send a letter suddenly to this company ABC, let's say, because they know this, they got this information from the MID. So they starting asking, requesting for information about these PVP holders that work in the company. They wanted to know who are they, why are they here, for what project they are coming here, are they coming here for 1 year or 12 months, a few months or more than 1 year. So that's why the company cannot run away. If I not inform IRB now, IRB will come to me. So once the IRB knows, then IRB will has a right to issue advanced assessment. Until to the extension. So that's why, but if let's say that IRB said that, okay, I will raise an assessment to your PV, because many of the companies, I do remember last time, Sean, there is one company where their PVP already left. They're not even in Malaysia. I don't know why the IRBN wanted to find out about all these people, PVP holders already left. So they penalized the company for not informing them. And worst scenario that they ask the company to bear the taxes for all this PVP. Because number one, what are the offense? You are not comply with the section 83 to notify them. Number two, you are not submit the income tax return to claim whatever tax exemption. Number three, because you are not paying all the taxes that should be imposed for all these people. So this is become major issues for some of the company last time, and they come back with an appeal to the IRBM because they one thing, because they are unaware of the IRBM procedure, because they thought that when all these people already left will not be subject to tax, why still have to inform IRBM? And now that's why IRBM make it that under section employees tax obligation become a very, very important, a very strict to all employees to comply.
Wow.
Because they don't want to lose the money. You know why? Nowadays, I think, okay, when the Malaysia economy last time, I think somewhere before the PVP or before the pandemic, when a lot of the oil and gas company, manufacturing company require all these people come. Sometimes this PVP not even 2 months, come to Malaysia. They just come like 30 days, 60 days. Okay, for those like 30 days maybe RIB give some concessions lah. Okay, leave it lah, because actually more or less they are qualified for the 60 days tax exemption. But for those who are come here the more than 6 months, when we're talking about their salary, let's say 10,000 per year or per month, and we are talking about 50 of them, and they're not even, they said that they shouldn't be paying tax. Okay, fine. IRB understand on that one. But how you want to prove that? That is a very challenge. This is the challenge part to many of the MNCs companies. So just that's why IRB came back with the public rulings and all these things and so on. Yeah. So this is a very important for all the MNC company, especially in the industry that require many expertise from PVP. Please do a study on how you want to manage your people. If let's say you want to manage your people to claim the tax exemption for 60 days, make it clear, employment contract less than 60 days. Double taxation agreement, make it clear, not even 1 cent charge to the Malaysian company. All actually paid borne by the overseas company, and there is no PE issues. That one is straightforward.
I guess your advice is that to prevent any
Yeah.
risk in the future, it's
Yeah.
better to do so lah.
To do so, to do so, yes. Actually, at the end of the day, they must have what we call this. They must have a system to understand the demo or mobility of their employees for the professional visit pass. Because now I think since April, government already opened the borders. So now I think they already started by having Petronas already shown a good sign of having their projects for the economic development. I think now they already come back. Professional visit pass now already started to enter Malaysia to boost the economic.
Yeah.
So this is the right time for them to just re-look how actually they can manage the people.
Right.
Yeah.
So as an
Okay.
experience from me, maybe as a sharing to the audience here is a lot of these PVP holders or
Yeah.
so what we call visiting
Ah,
experts lah.
yeah.
They always say that the contract, I was
Mhm.
contracted to say I'm supposed to receive $10,000 for every
Yeah.
month of service.
Yeah.
Okay, and that's what it is. You know, you try to do all this taxation, this withholding of tax and stuff like that. He will
Mm,
refuse to do it because he says that you this is my contract. You're supposed to pay me US
yeah.
10,000 and 10,000 it is. You
Yeah.
don't deduct tax. You don't do whatever it is, right?
Yeah. Yeah.
And then he lari already. You know, by the time he finished, then
Yeah.
IRB comes, then the company will suffer the consequences. That's what you
Yeah.
mean.
Yeah. Yeah.
So that's why my experience is that if you do something like that, make sure you put in that contract of service
Mm.
say that it's subject to the
Mm.
tax rules and
Yes.
regulation and reserve the right to withhold based on
Yeah.
the
Yeah.
taxation rules.
Yeah.
Yeah.
And then another thing, Sean, that is why some of the PVP holders or some of the expatriate, they are more than happy if the company bear their taxes. Yeah.
Yeah, most of them do like that.
But it's also a cost to the company. Yeah, because unless you really wanted the expertise, yeah, to come, you have no choice, so you have to bear their taxes. Some of the employee also, they said, I want you to pay me net of tax.
Yeah, correct. Net.
Net of tax. So I don't want to know anything about issues on my tax in Malaysia and so on. You pay me net of tax. So when you pay me net of tax, so also must indicated clearly in the employment contract. Yeah, but also, of course, this is a burden to some of the companies lah. But unless the companies can benefited from all this arrangement, I think no harm to do all this. Yeah, just to make sure that the company protect their reputations of having all these PVP holders comply with the tax compliance, and all and these PVP holders also at the same time feels that Malaysia is one of the country that very good in terms of compliance. So they are more than happy to come back to Malaysia for anything, because sometimes we don't want, because of the bad experiences for all these PVP holders, they may not want to come back to Malaysia, and we are having difficulties to get the expertise to come in and so on. So these are win-win situations.
Okay, right.
All right.
So before we end,
Yeah.
thank you very much. In a nutshell, please do seek advice from experts like CROWE,
Yeah.
right? Yeah, at the end of the
We
day.
are more than
Okay.
happy. Yeah, you can
Yeah,
always write to
all
me.
right.
Yeah, it's
Don't
a good
try to,
session.
don't try to think, just a little bit like 60 days, less than 60 days, we can get
Yeah.
away with it,
Yeah.
just spend some money to get good advice lah. Okay.
Yeah. Yeah.
All right.
Okay. All
So
right,
we don't have
Sean.
any more questions. I think
Yeah.
we can end the session now. Quite good.
Yep.
We are almost right on time.
Yes.
So for everyone else who's tuned in, keep your eye out. There'll be more of such sharing sessions and the sharing of even experiences, real life experiences that
Yeah.
we have gone through, and
Yeah.
it might be of use to you. Okay.
Yeah.
So
Okay.
see you guys next time round.
Have a
Goodbye.
good day. Bye-bye. Stay safe. Okay. Okay. Bye-bye.